Ever gone Dutch on a fancy date, only to realize there were more ways to split the bill than you thought? Financing industrial real estate can feel just as varied and surprising. Securing the right financing for an industrial real estate purchase is crucial, similar to navigating the financial aspects of a complex relationship. Each option comes with its own benefits and challenges, shaping the way you invest in and grow your industrial portfolio. Today, we're going to dive into the common financing options available, helping you choose the best fit for your investment strategy. Let's talk first, traditional bank loans. The old faithful of real estate financing. Traditional bank loans offer relatively low interest rates and long repayment terms. Think of them as a steady, reliable partner you can lean on for major purchases. However, they often require significant down payments and thorough financial scrutiny. Number 2, SBA loans. For smaller investors or those looking to expand with a little help, SBA loans can be a perfect match. These loans are partially guaranteed by the government, reducing the risk to lenders and often providing more favorable terms and lower down payments than traditional loans. Number 3, bridge loans. Need quick cash to clinch a deal? Bridge loans are like a whirlwind romance, fast, intense, and short-lived. They provide immediate funds, but typically come with higher interest rates and shorter repayment periods, making them ideal for investors planning to either sell or refinance the property quickly. Number 4, real estate investment trusts, more commonly known as REITs. Joining a REIT is like entering a polyamorous relationship with other investors. It allows individuals to invest in large-scale real estate ventures without directly managing the properties. REITs offer liquidity and regular income through dividends, but they limit the control over specific investment choices. Number 5, seller financing. Sometimes the seller can help finance the purchase, much like a partner who supports your dreams. Seller financing can offer more flexible terms, such as lower interest rates or deferred payments, especially if the seller is eager to make the sale, but the buyer struggles with securing traditional financing. Choosing the right financing option is crucial. It affects everything from your cash flow to your investment's long-term viability. Consider your financial situation, investment strategy, and risk tolerance when making these decisions. Intrigued by how these financial strategies play out on the global stage? Next time, we're going to explore the impact of global trade on industrial properties. It's like knowing which international waters you can safely navigate financially. Remember to like, subscribe, and turn on notifications for more ECMP studios. Got a financing story or question? Drop it in the comments below or reach out to us directly. We are here to help you understand and navigate your options. Let's keep learning, keep planning, and as always, keep it real. Stay